Lucid stock is acting like every other EV stock we've ever known. They overpromise, they underdeliver, they burn through lots of cash. They're going to have to raise more money, but there sure is a heck of a lot of ways to make money from a technical perspective. We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to catch up with the story of a Lucid Group, ticker symbol LCID, maker of very high-priced and luxurious electric vehicles. Over the last year, stocks actually held up pretty well, down 12.8%, but I guess a lot of retail traders bought these ones on the highs, and year to date, the stock paints a bad story, down nearly 49%. That includes a drop in the after hours over 11% on the heels of those Q2 earnings, which came out after the bell for Lucid. Revenue coming in at $97.3 million. That's a problem when Wall Street was expecting nearly $60 million higher, close to $157 million per share. I tell you what, this is also another lesson for Lucid management, as they need to get in closer coordination with their analysts to get these estimates a heck of a lot closer to reality. Now, notice for the upcoming quarter, we were expected to go from 157 all the way up to $403 million. And then in Q4 of this year, we were supposed to get to $773 million. And quite frankly, we would continue to grow after that to over $1 billion in sales sometime next year. Unfortunately, that's not going to happen because Lucid revised their 2022 production volume outlook to just 6,000 to 7,000 vehicles, which quite frankly is what Tesla produces basically in one factory in 1 week. This is for the rest of the year for Lucid. Now, the guidance, this is probably even more tragic, is the fact that the guidance was closer to 12 to 14,000. So they had to cut their production targets in half. You better believe when we come over here and look at the financials, that is going to paint a very, very ugly story. Now, in terms of those financials, the first thing they kick off with the balance sheet, and I couldn't think of a better statement to lead off with, because you better believe over the last year, in fact, over the last just 6 months, we went from over $6.2 billion worth of cash, $4.3 billion roughly in that cash position. We still have over $1.9 billion worth of long-term debt over here. Now, in the most recent quarter, they had net revenues coming in at $97 million. Again, the street was expecting 155. That's what they've done over the last 6 months. Now, look at the cost of revenue. I tell you what, if you're out there, instead of buying Lucid stock, you should go buy the cars, because off of $97 million worth of revenue, they paid in terms of to build those cars, raw materials all in, over $292 million. So they are giving away these cars. From a research and development standpoint, that ballooned from 176 to up to over $200 million, and our selling, general, and administrative expenses, that rocketed to the moon from 72 million all the way up to 163 million. Our total cost and expenses went to $656 million last year, just 250 million. So you take $97 million worth of revenue and you minus off 656 million, and you get a loss from operation more than double where it was last year to $560 million. Now you flow all the way down to net income, doesn't paint any better story. Now, what's tragic for you, the common retail shareholder, is look, we had 36 million shares outstanding last year. Now look how many shares are outstanding. Over 1.67 billion shares outstanding over at Lucid. And if you think this number is going to go down anytime soon, absolutely not. Quite frankly, it has to probably triple. Moving down to the cash flow statement, it's going to paint an even uglier story. You have a net loss of $220 million, despite $94 million worth of stock-based compensation in the most recent quarter. That was up over 70 million over the previous year, where you were sitting at 24 million. Your net cash burn just operating the company was over $500 million. You had another $300 million of purchase of property, plant, and equipment. That's over $800 million. Again, this is just in 1 quarter, guys. We burned through $800 million just operating the business, and then property, plant, and equipment. Now, we also had other purchases of investments, those down $1.4 billion. So just on our investing activities and our operating activities, over 2.2 billion. Yeah, with a B in terms of cash burn in a quarter. I'll remind you, Fast forward to the balance sheet, which was really all you need to look at. You have just $4.2 billion worth of cash over at Lucid. That's why that number of shares outstanding just going to continue to go higher and higher, and potentially the debt portion, if they can't raise it via equity, well, they're going to pile on a ton of debt over here, sitting at $1.9 billion. The financials over at Lucid, what they look like now, will just continue to get worse and worse. Now, from a technical perspective, though, oh my goodness, things are looking absolutely beautiful. We are sitting on a level of rock bottom support. Now, the stock has broken through this level where it's sitting at almost on the penny right now at about $18.20 in the after hours. That's 11% decline. After these Q2 numbers crossed, the stock was up about 4.2% during the regular trade. We are sitting on a level of support. We also have in the micro trend higher lows. So from a technical pattern perspective, we actually have a crossing of two lines where you absolutely would buy this one from a technical perspective. You've got an area of support here at 1820. You also have the higher lows converging there as well. From a bull case, the stock is likely to bounce and probably retest an area that I have marked out here. What I would say is in the middle of the sideways consolidation. The vast majority of the sane candles on this chart, there are some insane candles up here north of $30 per share. Anybody who bought this stock for over $30 per share is absolutely insane. Now, considering this company still has an over $30 billion valuation, and the fact that they're going to have to raise billions, tens of billions of dollars to ever reach any kind of scale over at this company, I don't consider buying this stock from 18 up to 30 sane as well. But that is where the sideways consolidation in terms of buying on this stock has occurred. I would expect Lucid to find footing here exactly where it's at, and then make a rebound up to at least the middle of the channel here to $22 per share, and potentially all the way back up to $27 per share, where I'd also expect some heavy selling, as that area has materialized as a selling point numerous times over at Lucid. Again, what I'm talking about here is from a technical perspective. From a fundamental perspective, there is absolutely negative reasons. I mean, there's not zero reasons. There's negative reasons to own this company for any length of time. But from a technical perspective, you could play the potential pop in this one. I would have a stop loss very tightly underneath this one, because believe me, the minute this technical pattern breaks down, or Lucid comes out with a press release saying, hey, we've got a $5 billion equity offering that we're going to offer, and it's down here at $12 per share, well, this one would gap down. So this is a very high risk trade. Quite frankly, there's probably trades that are setting up similar with less risk, less speculative of company. But if you're interested in some kind of popcorn trade, it's probably there with Lucid. Absolutely wouldn't even touch this one with a 30-foot pole from a long perspective. From a trade perspective, it is there. If you do like EVs, quite frankly, you go with the market leader, and I think we all know who that is, and probably will remain that way for the foreseeable future. Hopefully, guys enjoyed today's video. Be back again soon with more. Good luck with your investments.